a PAT as of now of 11,070 crore. Largely in line is the PAT number. 10,890 crore is the expectation for PAT, and 11,400 crore was that PAT number same time last quarter. So Q4 saw a PAT of 11,400 crore. So we're seeing a slight marginal decline in PAT, but slightly above what our ET Now poll was suggesting.
I've got some more numbers as well onto the revenue figure. We were expecting 59,500 crores from the company to report on the top line, when the company has reported 59,381 crores into their consolidated revenue, and that's definitely on a quarter-on-quarter basis where we are comparing the numbers, and that the revenue has come in actually in line to the ET Now estimates. And if we talk about the EBIT figure, that has come in at 13,755 crores, and that's actually exactly matching the estimates. When we talk about the margins, then EBIT margin of 23.2% is what the company has reported, and that too is in line what we will call with the ET Now estimates, because we were expecting 23.4% into the EBIT margin figure. We'll welcome on board Sandeep Agrawal. Hi, very good afternoon, Sandeep. You wanted to have your first cut on TCS earnings. The profit has come in a little above to what we were expecting at ET Now, while the EBIT margin has come in line to the estimates. How do you look at the numbers, and what's your first cut on the same?
No, yeah, so on profit and margins, the numbers look good. They look in line with estimate as rightly mentioned by you, but we have right now very limited data on the constant currency growth and dollar growth. So, very hard to comment on that front, but prima facie, the EBIT and the PAT numbers look really in line to slightly better, I would say.
We are being joined by Mayuresh Joshi as well, who is the equity head at William O'Neill. Very good afternoon, Mayuresh. The TCS earnings are out, and this seems to be a decent quarter this time around, and a little bit marginal uptick from the ET Now's estimate is what we are witnessing. What's your first take on TCS earnings?
First of all, I think the revenue from operations, I think the top line seems to be in line with market expectations. And therefore, I think what the management commentary will be, because I think the sole criteria that the street is probably looking at in terms of order wins, in terms of stress, specifically in banking, retail, manufacturing, any issues in terms of pricing related to deals going forward as well, and the utilization levels on their balance sheet as well. So prima facie, I think the numbers, at least on the top line in constant currency terms, seems to be in line with estimates. I think it's all about management commentary and all these aspects there.
This time, the order book has been clocked in at $10.2 billion, bill-to-book ratio of 1.4. The net headcount addition is at 523. Attrition count is at 17.8% for their IT services, and the constant currency revenue growth has been clocked in at a 7% on a YoY basis. If we talk about the management commentary, they sound very optimistic, because do remember that this is the first time wherein the top boss of TCS now, K. Kirtivasan, will be taking over, and we have got his commentary wherein he says that it was a very satisfying start to the new financial year with a string of marquee deal wins. They remain confident in the long-term demand for their services, driven by the emergence of new technologies. They are also investing early in building capabilities to scale on to the new technology, and in research and innovation, we can minimize our participation in these opportunities.